And a stock that has been decidedly off target. Target shares falling nearly 11% at the low of the day, closing down, call it only 6%. Now, they did beat second quarter sales and profit estimates. But here's the question, guys. Did earnings even matter? Because Target unveiling its new CEO. And it's a longtime insider. Really, it's the current number 2 to the current CEO, Brian Cornell. With shares more than cut in half from the all-time high it hit during the pandemic, can Target's next CEO really turn things around? Guy Adami, do you think this insider, the market didn't like it today, but what do we know and what do we think?
Well, welcome, obviously, number one. The market is saying they wanted an out. They wanted something new. They didn't want more of the same, and that's the problem. And I think you just hit the nail on the head. The quarter wasn't an abject disaster. It wasn't particularly good, but it wasn't bad by Target standards. I actually thought inventories, they're starting to get them under somewhat of control. But the market is saying we need a new voice. We need a new vision for this company, and you're not going to get it internally. I mean, you just said it. Go back to a 4-year chart. This is a company that made its all-time high, I think, in the fall of 2021. And over that same course of time, Walmart's done nothing but go lower left, upper right. Target's been the exact opposite. Now, it is somewhat Target specific, but at a certain point, you got to start finger pointing. And the market pointed its finger at management. Management didn't change.
Okay. On that same album, they said nobody knows what it's like to be the bad man.
Yeah, to be the sad man.
Okay. I don't know this guy, Karen.
Yep.
I think about AT&T. AT&T had a CEO, Randall Stevenson. Market didn't like him. He leaves. His number 2 gets promoted. Market was shaky on him. Guess what? Stock has soared since he took over. Are we being too hard on a guy that most of us probably don't know anything about?
Well, that's probably true. Stanky probably did some bold things, though, it seemed. But anyway, going back to Target, I looked and said, the board unanimously chose him. I looked at the board. The board is a who's who of a lot of corporate America, right? Head of Safeway, Elevance, UPS, Clorox, CDW. A lot of great names there. One sort of thing that was missing to me was somebody with real retail experience, like somebody from somewhere like, let's say, a Pottery Barn CEO from that division, something like that. So that was sort of surprising to me. I like to give the guy a chance, but I agree completely that was the problem with the stock today.
Stocks down to lows, Steve, not seen since July of 2019. So really call it a 6-year, a little bit more than 6-year lows. But 2 ways to look at it. It should have never been as high as it was during the pandemic when everything got stupid. We were all just, ordering stuff online. The valuation isn't out of line compared to a lot of other names.
Yeah, I think people have just lost their trust in the name, and it's an approve me state. When you promote the old, you get nothing new. Reverse of out with the old, in with the new. And when you look at what he's done, he was there for the collapse. Did he make the decisions that caused the collapse? I have no idea. But when you look at Walmart, guys said it before, the stock has doubled in 4 years. Target's down 64%. Right? So somebody's doing it right. Now, granted, Walmart's much bigger, much more powerful. But you have to get someone from the outside. And I'll leave you with this last thing. Nike did the same thing. Suffered. They brought in someone who's been there forever. You need new blood in this type of situation.
Julie, the only point I was trying to make, and we got Courtney coming up on the story too, is that I don't know who this guy is. We don't know what this guy is about. We just know he's from the inside. So it's kind of a sell first, buy later. If I had to make the bull case on Target, I would say, number one, they got thousands of locations. Number two, 13 times forward earnings. That's near a 10-year or even more than a 10-year low. And they pay a 4.6% dividend yield. You could start to make the case for Target, maybe.
Yeah, I think you can make the case from a valuation standpoint, particularly the dividend yield. I wouldn't necessarily do it off of forward earnings because this company has seen its earnings evaporate in a way that is pretty alarming, and it's why it's where it's at right now. But I really agree with everyone on the panel, and particularly Karen's point, there's no one on that board that has really deep retail experience, and this is a clear retail turnaround story that needs to happen. Particularly for Target, Target's way of differentiating was delighting people with cushions and lamps and things that they absolutely do not need. That takes a real merchant prince kind of a personality to change, not a COO, CFO. That's not what's really going to get it done. And I think until you inject a lot more enthusiasm for the actual merchandise, you're going to have a hard time convincing shoppers to come back after you've upset them for so many months.